next up is Josh Fair with the Wyoming Reserve. Really like this one. This one's a little bit different. If you want something different than real estate, Josh Fair has got a great one for you. Helps you participate in the gold and silver economy. I'll let him tell you more about it in a moment here. He's coming up onto the stage right now. Josh is going to be presenting for you today the Wyoming Reserve.
Yeah, thanks for having me on again. I think last time we spoke, Jimmy, we were in our first offering, and now we're in our second offering. So we've come a long way. The world's changed a little bit, and being the oddball investment here that is we're primarily related to gold and silver. So as an operating business, I think this is with what's going on in the world and the major changes in the financial system. This is a pretty exciting time to be able to talk to you today.
Absolutely. I'm looking forward to this one. And, for those who don't know, I went out and visited this Opportunity Zone investment. When was that? A year or two ago, I think it was.
I think it was
I think it was
just over a year ago.
last summer. Yeah, about a year and a half ago, went to Casper, Wyoming. It's real what they have there. It's pretty cool. So I'll let Josh take it away from here, though. Go ahead, Josh.
Yeah, we can jump into the slides, but essentially we are not a real estate play. We don't have debt. We don't do anything with interest rates. We're essentially a high security vault operation. So we own a vault, and we make money off of third party storage. And as you can imagine, all the movement of precious metals all over the world, primarily leaving Europe, a lot's going to China and a lot's coming to the U.S. There are vaulting issues all over the world, meaning they're out of insurance limits and they need new facilities. So for us, it's a great opportunity to have already been in this sector and getting this going off the ground. But what's a little bit different for us is as we raise capital, our balance sheets consist of 90+% gold and silver. So with that, let's jump in and I'll kind of walk through the slides. So let's go next page here. One more. Okay, so as I mentioned, if you forget anything or everything that I'm about to say, remember these four things. So we have precious metals. We're a vaulting company. We offer smart liquidity features, and we're also a qualified opportunity zone. And with that, we'll hit the next slide. So this is the facility. It's been in construction. It is fully operational right now. We've got we have an art gallery that's coming in, a few other things and I'll reference that. All the real estate is held by one of my other companies. So this investment has nothing to do with the real estate, but this is when we get the full facade, this is the rendering of what we'll look at. Right now, we're operating in just over 60,000 square feet. It'll be a little over 70,000, most likely when it's fully done. And next page. So where is Casper, Wyoming? A lot of people aren't familiar with where we might be. Maybe you've been to Jackson, maybe you've been to Yellowstone. We're essentially a 4-hour drive north of Denver. Why did I choose Wyoming? It is one of the best states to operate in. Obviously, Texas and Florida have been capturing a lot of the economic energy and discussion, but I'm going to go with Wyoming's even better. You're going to see a lot of the custodian companies and the digital sector are going to be selecting Wyoming as its headquarters. And one of the things on there, it's the top sound money state, which means while all states have issues, including Wyoming, it's better than every state, which means it balances its taxes and its revenues and spending, which means it's very consistent and stable for a business for the long term, which is what our entity does. So we have no corporate tax, no state income tax, no franchise tax, no occupation tax. It's a fantastic place to kind of settle in for what's been a very interesting decade so far. We'll jump into the next one. So here we're going to talk about the business. So what you're getting, sometimes you look at these OZs and tax benefits, the key thing is that you're just getting tax benefits. I believe the most exciting thing about this is our actual underlying business. We are a C Corp. So why fund is in our name, we're actually a C Corp. But the cherry on the top is the opportunity zone component. So we'll hit that next slide. So our goal is, as a company, to produce income. And so as we manage our assets and our balance sheets, that we're building the opportunity for us to capture the price appreciation in the underlying price of both gold and silver, but also having a number of business income streams that we do, and we'll cover that in a moment. Probably one of the biggest differences between us and most is liquidity. So we have it's a 1-year hold. So while you may want to hold, obviously, if you're an OZ for more than 10 years to get that tax-free appreciation, the optionality here is that if you need some or all after 1 year, we're able to buy back your stock. So we make a market in our own stock. And how we're able to do that is our inventory is completely liquid. It's gold and silver is incredibly liquid. And so we're able to reduce down our inventory and buy back that stock each and every quarter. So as we raise more capital, we're able to provide that liquidity option for our investors. And really, it's also about wealth preservation. So, most likely you're watching this because you've made money, and whether it was through a sale of a business or a large cap gain with a sale of what could be stock, it could be anything. But most likely people are looking at, how do I keep most of my money and not have to pay it to Uncle Sam and keep it working for me. And so we look at precious metals is something that really is almost anti bad economy. So typically the more uncertainty we have, the more distrust of politicians, the more of the uncertainty of the economy as a whole. Our sector does quite well. And in fact, I think it was about a month ago, Morgan Stanley CIO just came out with a new portfolio. Normally these portfolios are traditionally, just stocks and bonds. Now they just rolled out a new portfolio of a 60-20-20 with a 20% allocation to gold. And so this is really quite interesting because the reality is most Americans in particular are under allocated to this asset class. It's typically a self-directed class. And a lot of people would complain that just owning physical gold or physical silver, it doesn't do anything for me. It just sits on the shelf and it doesn't produce any business income. So we're essentially a hybrid to bring all that in together. We'll jump to the next one. So how do we drive profitability at our company? So our metal that we hold is always available for sale. So we're turning it. So we are long the physical metal. So as we raise money, we buy more physical gold and silver. I will mention we are physically audited by third parties every quarter. So, and as we're turning that inventory, we are making a little bit of income there. We also make money off of storage. So you might be familiar with self-storage facilities that have boomed over the last decade plus. We do it a little differently. So instead of letting people put in their used furniture, we're putting in high dollar items in there. So we make money through the vaulting services. And we also are very similar to Amazon in the sense that we offer fulfillment services. So companies can put high dollar items with us, and then we make money on the vaulting fee and the pick and pack fee. And so right now we're involved with, we've picked up a number of customers from around the world. And so we're managing their web shop of movement of gold and silver products out of our facility. And then that metal availability services, it's not quite financing, but it's kind of similar. So we're able to essentially think of a car dealership. You walk onto a car lot. Does that dealership own all their vehicles on the lot? And the reality is no. Most likely it's floor planned or consigned by a bank. And then with that optionality, that bank gets to make a small fee, and the dealership's happy because now it has more options to sell for its customers. So we're able to actually hold physical metal with companies, different brands, names on it for their inventory, and we're able to securely, with no credit risk, make a little extra income off of our metal. And really, in that the third one here is the appreciation of precious metals. So our in my personal take of why I set this fund up and why we're going to just be in a continuous stage of raising capital is precious metals are going up because of distrust of politicians around the world. They're not showing any signs of fiscal responsibility at all. So why not just hold and manage an asset class that's doing great? And so and then the last one is the active inventory management. So our team meets every single morning, and we're looking at our ratio between gold, silver, even platinum, palladium, other items that we're holding, and we're looking at those allocations. So as that capital comes in, the question is, do we use all that money on that day to buy, or are we going to scale in, or stay a little light? Are we going to just sit on maybe a treasury bill for a few weeks? So as we're doing that, we're running this as a bit more of a sophisticated model where we're not trying to hit home runs, but we're just trying to hit singles and doubles with how we manage our inventory. Next slide here. So what's going on with precious metals, and we'll go to the next slide. This sector is really booming, and there's a huge need. There's a lot of market changes that are happening. You're seeing companies like Costco who are now offering precious metals, and they can't keep it in stock. So here, our inventory, up to 100% of available funds is invested in the physical metal. And so we are always net long something, but we do have the optionality, and we do hedge a little bit. So while our investors want us to be net long, the question is, are we taking 10% off the table, 20% off the table, kind of a thing? So depending on the marketplace, we're trying to do our best to manage those things. But obviously, if gold had a terrible year, our job is we want to be a little bit better than that. And it has a great year, we want to be a little bit better than that. So as we grow our capital base, we're able to get more and more aggressive with our offtake agreements with mines, refineries, as we hold those things. So we're very tangible, we're very physical. So while we're not open to the public, we are here for site tours for investors, prospective investors. When people come, you want to hold $1 million or $2 million in your hands. When people do it, they feel it. We have armed guards here, X-ray, metal detection to come in and out. It is quite a facility. And on site is another company that I started 17 years ago, which is a manufacturing company called Scottsdale Mint. And that company produces for over, I think, 20 foreign governments and central banks, private banks that sells, like TD Bank in Canada. And so the Wyoming Reserve, though, is way less sophisticated in that it doesn't have to worry about the manufacturing, but it gets to feed a manufacturing company and then get the vaulting business that manufacturing company is spitting off. We'll do the next slide here. So snapshot. So, hey, probably known gold's done pretty well, and so over here in 2025. But let's take a snapshot let's look at it even as you look here over the last number of years. If we go further out, over 10 years, it's over 10%. And really in 71, so we're over 50 years. And why do we pick 1971? Americans were not allowed to own gold bullion as an investment at that time. So that was when Richard Nixon finally cut the last tie, the last backing of anything with the US dollar. So since then, the combined rate between gold and silver is approaching 8% a year, which is that's not too shabby. So oftentimes we do go through periods where precious metals are not a great asset to own, but you can even see over a long period of time, it's actually not too bad. We'll jump to the next one here. So the vaulting component. So we have a class 3 vault that's UL rated. Right now, we have insurance up to $500 million. We have built it out. We've done a number of security audits through Lloyd's of London, and this facility is really second to none. And with what we offer with this high security vault is that people can put their assets here for safekeeping, long term, short term, and as we keep going. We'll jump to the. So how does a vault make income? So vaulting and storage fees, I already talked about. We mentioned the metal availability fees. So it's financing businesses. So it could even be jewelry companies where we're not maybe financing their let's say their premium, but we're essentially able to hold their melt value of their material and offer something that the banks can't offer. So banks are offering a rate that's going to be a lot higher, and so we can come in and approach these commercial companies and say, well, what are your finance costs with your bank, and we can beat it because we're using our own capital that we want to turn and own. So as we turn that precious metals that we buy from the refineries and we move that material, we're making just like a bank. They say, hey, give you free checking. And then suddenly they're able to offer all these services where they're able to tack on extra income opportunities for themselves. One of the things that's very exciting, so it says designated as a foreign trade zone. I'm happy to announce we were actually just activated a few weeks ago. So we are, from what I know, I think we're the only facility in the United States for precious metals that is a foreign trade zone. What does that mean? We're tariff free. So items can be brought into our facility that may have tariffs, and we realize the tariff fears move at the speed of a tweet these days. So whether you're a commercial company, a private company, you're able to store in our facility and defer and not be exposed to those tariffs. So we're able to offer that service. So we're very excited about moving into other bespoke assets that could be put onto the blockchain, for example. Might be other types of metals. Maybe there's art. There's other things that could come in. And as a company, we just get to hold it. We're the custodian. We work with the companies to be audited, to be appraised, and we just able to offer quite a bit. And virtual elimination of shipping costs for those, again, because we're on site with manufacturing and the other company, Scott Stominson, in the same facility and produces for hundreds of wholesalers, banks, governments all over the world. It's really able to do all this on site, and the Wyoming Reserve is now just kind of mopping up all the vaulting services and the fulfillment services. And on-site armored transport services. So we are about to go live probably next month. We have a new Sally Port, which is a drive-through bay. It's more than 100 feet long, a super high security garage drive-through for armored trucks. So as they come in through, there's two armed guard booths in there. One of them is run by our team. And then we have another one where right now there's two companies that are competing to possibly lease space in our facility to handle the transportation for the customers that are bringing in gold. To give you an idea, there are customers that we're currently dealing with that move in excess of 10,000 to 20,000 ounces of gold at a clip. And if you want to do the math on that, at over 4,000 an ounce right now, you can imagine it's a lot of material. So we'll jump to the next one, the liquidity. I hinted a little bit on this. So we offer quarterly liquidity. So we take our company and we manage everything on a mark to market daily. So we're managing this business every single day. And at the end of the quarter, we're physically audited, and then we take the metal movement, and we take all that business activity all around, and we are able to add in all that extra income into it, and we strike a new what's called SRV, stock redemption value. So as our price moves each quarter, that's the price at which an investor is either buying in or selling out. And we're able to do that where we can offer it. So if someone wants to take 2% a quarter out, for example, someone that might be on fixed income type mindset, those types of things, we're able to be pretty flexible there. Yeah, so here's again what we talked about. Whether you want to sell a little bit or a lot of it, it's just a 1-year lockup. So we're doing this pretty quickly. We are in offering 2. I don't know if we've had any redemptions yet, but we've had a number of investors who are putting in, have put in, I think we've had close to 10 investors off the first round. So to be clear, we raised $26 million in offering 1. And this second offering, we're raising 120 million. We're up to already about 40 million in AUM. It's moving quite quickly. We're hoping that we'll finish this offering sometime, hopefully next year in 26, and then we'll launch what will be OZ 2.0 pretty quickly. So our goal is we want to raise hundreds of millions of dollars, and the more we raise, the more efficient that our business gets. And anything else? So yeah, the liquidity option. We just want to be as flexible as possible. You know, I'm a huge fan of tax efficiencies, but sometimes you have to sacrifice, you know, just being able, you know, holding things. I'm a big proponent of transparency and flexibility with people. And so as we really structured this model, 7 law firms put this together. Deloitte's our tax. So we use some of the best in the business. We do have we originally started with a tax memo, and now we have a full opinion letter from a very large law firm of how we qualify for an opportunity zone, because the metal is tangible physical property and it's used in an actual trade. And so it's always available for sale. It's always turning, and it's creating a lot of economic activity here in Casper, Wyoming.
And Josh, we are just about out of time. I don't know how many more
Yeah.
slides you had left, if you're able
No,
to
I
wrap
think
it up.
we probably hit most of it here. So
Okay, good. Let me see if I can just kind of scroll through some of these. I think you covered a lot of this already.
yeah,
We know about the QOZ advantages.
most of the people here know those pieces. That's right.
Here's some of the
Yep.
highlights here. Accredited investors only, 506C offering $115 million of common stock. If they're interested in learning more, there you go.
Yeah. Yeah.
There's Allie on the screen there now, her phone number and email address, and scan that QR code to learn more about the Wyoming Reserve. Josh, really appreciate your time today. We did have a question from Bill. Maybe you can answer the quick version. I know we've got
Yeah.
Green Street coming up next here in just a moment. I'm going to get to Josh and Dan Greenberg momentarily, but question I had for you when we first spoke, I still remember our call. I was driving, I was on my way to the airport to pick somebody up, and we had like a hour-long call. It was a couple years back. I asked you,
Yeah.
how the heck does this qualify as an OZ? Maybe you can give a quick answer to that.
Yeah. Our tangible physical property. So while we don't have real estate, we own a vault. So we own the structure of the vault. We lease the space in this high security facility, and it's our inventory. Our inventory is tangible. It's physical property. So people think of OZs as just being primarily tangible real estate, but it's just property, period. So gold and silver, there's actually an exclusion for gold in the IRS rules, but that's when you put it on the shelf, similar to land banking. You can't own land and put a parking meter on it and 10 years later say you created economic development. You didn't do anything. The same thing with gold. But because our metal is turning, we're a real business. We're creating jobs and opportunities. We're working on a customer right now that could be a gigantic opportunity that the reserve would hire. Have to hire roughly 10 more people, and on the manufacturing side on site 40 to 50 more people. So as we look at these, we are absolutely creating a lot of jobs here in quite a big facility. So that's how we're able to be qualified.
Well, that's awesome. Josh, we've run out of time. Thank you so much for your support of OZ Pitch Day. Looking forward to doing more with you throughout the course of this year and next and beyond as we head into
Absolutely.
the new OZ 2.0 era.
We're going to be in perpetual for years to come. So thanks for your time.